Rahim. Assalamu alaikum, and a very good day to all students out there. Today I'm going to discuss the suggested solution for final exam question, June 2018. Question 2. So let's start. Question 2A, state the two recognition criteria of intangible asset as per Mfrs 138, intangible assets, for 2 marks. Okay, you can state just two, so you'll have to state all four. Probable future economic benefits will flow to the entities. That one is the first one. Second one is the cost of the asset can be measured reliably. Next. Okay, this is part 2B. Below is the information relating to intangible assets of Yusuf Akil, provided by its directors for the year ended 31st of December 2017. So if you look the year end is 31st of December 2017. So let's look at what is the important highlights here. It was on 31st of December that you were asked to given the information by the board of directors. 31st of December. On 1st of January 2016, this is the information about patent. So on 1st of January 2016, Yusuf Akil purchased a patent from IH at the cost of 500,000. So that is the initial cost of it, and it was being purchased. So this is actually an externally generated intangible asset. Externally generated intangible asset. The patent has an estimated useful life of 10 years. So you need to amortize later for 10 years when necessary. Yusuf Akil purchased laboratory equipment costing 700,000. Purchase of laboratory equipment is actually a purchase of PPE on 1st of January 2017. And it was purchased to carry out various research and development projects. It was purchased specifically for the R&D project. It is a PPE. And the cost incurred for research phase was 300,000. So for the research phase, you incur a cost of 300,000. And development phase, you incur cost of 900,000. Then you have the information development phase met the criteria for capitalization. So development phase will be recognized as intangible asset because it met the criteria for capitalization. So research cost, it will be expense of, and the economic life of the equipment, not the development cost, but the equipment that was purchased 10 years ago. It was 10 years ago, so that the estimated is on the day of purchase was 10 years with no residual. Okay. Next. And then the same year, 2017, Yusuf Akil applied for and received a license. He managed to secure a license. The cost attributable or the directly attributable cost associated with the license, filing of the license, 200,000. So this is another separate acquisition or externally generated assets worth 200,000. The economic benefits are expected to be received from the use of the license, and that is indefinite. So this is intangible asset. life. So you should understand that there will be no amortization where you need to do so. Over the years, Yusuf has incurred number 4, expenditures that contribute to internally generated goodwill. So this is internally generated intangible assets. Internally generated intangible assets is not the one that is mentioned under paragraph 57 of Mfrs 138. So internally generated goodwill and other internally generated intangible assets, with the exception of development costs, capitalized will not be recognized as intangible asset. So the estimated cost of that so-called goodwill is 2.3 million. Okay, look at the requirement. Thus, to assess the accounting treatment for each of the above situation or transaction. So the first one is on patent. So company can recognize patent as intangible asset. Okay, because the definition and recognition criteria. For example, these are the recognition and criteria because it can be measured reliably, and there will also be flow of economic benefits. Then mention about initial measurement. Initial measurement at 500,000 is the initial. Then the patent has a finite useful life. Therefore, it will be amortized over the useful life. How much? At 50,000. So 50,000 is just 500,000 divided by 10. So then we go to the second one. Second one, the cost of laboratory equipment purchased for the R&D. Yeah, it was not used for the PPE, but more on the R&D. It's to 700,000, and that should be treated as PPE in accordance with Mfrs 116. So 700,000 will be debited to the PPE and will be credited to the bank or payable. So it will not be debited to the R&D project. The research cost of 300,000 in terms of accounting will be expense of to the SOPL. We can add that expense of to the SOPL here. And only 900,000 of development costs can be recognized. So development costs can be recognized, and therefore it is recognized and capitalized as intangible asset. Next is what to do with the equipment. So equipment will depreciate each year. So depreciation of equipment, which is 70,000, 700,000 divided by 10 years, can be capitalized. Can be capitalized where? Included as part of development cost. And you have development cost of 900,000 here. So therefore another 70,000 will be added to the development cost. And the total of 970,000 will then be capitalized as intangible assets. Next is on license. License that were recognized, will be classified as intangible asset and will be measured at a cost of 200,000. So this is initial recognition and measurement, the first statement here. And the second sentence, no amortization is provided. You need to mention as the license has indefinite useful life. As the license has indefinite useful life, there will be no amortization. As the license has indefinite useful life as well, an annual review of useful life must be made, should be made, meaning that before this, it has an indefinite useful life. Every year, the company may need to review the useful life to see whether it is still indefinite or it will become definite. So it should be made in case there is a change in useful life, which is a change in accounting estimate. And it will also be tested for impairment. So this is going to be tested for impairment whenever there is an indication of impairment, indicator for impairment. Okay, last one in part B, and is about the internally generated goodwill. FAR 138 prohibits, prohibits means does not permit. Okay. The MFRS uses the term prohibit, which is does not permit the recognition of internally generated goodwill as an asset. So that is not allowed. Why? Because that is not an identifiable resources, and therefore the company also does not have control over goodwill. It is not control or resources that is under the control of the company. Next. Okay, question part 2C is on development, research and development project or research and development cost. These are development expenditure of a project called Healthy Life. Okay. You have the development expenditure 9 million in 2013. 2014, you incur another 17 million. 2015, 20 million. Nevertheless, the manager of Segaf Rahat, the company, only assured the feasibility of the product from Healthy Life at the beginning of year 2014. So this statement in green here is trying to show you that this is actually the simple indicator, yeah, of the development cost that meets the capitalization criteria. So in 2013, no, the manager was not assured, right? So this one will be expense off if you are asked about the accounting treatment for 2013. This will not be capitalized, it will be expense off because it does not meet the capitalization criteria. But the one in 2014 and the one in 2015, beginning of 2014 and also in 2015, these two expenditure will be capitalized. Then this happened to be statement in 2016. So it is like 2013, 2014, 2015, and now it's 2016, the fourth year. Commercial productions command started, right? And the product is expected to bring economic benefits for 5 years. So when you start producing that so-called healthy life product, yeah, it will be able to bring economic benefits for the next 5 years. That is the point where you start doing your amortization. Therefore, amortization of development costs is also on straight line basis for this company, based on period of ownership. Period of ownership here means monthly basis. But here it's not really a problem because it is 1st of January to be the beginning of the year. And the year end is 31st of December. Unfortunately, on 31st of December 2014, which is the 5th year of it, 2013, 2014, 15, 16, and this is 2017, the 5th year of the development project, you notice that the present value of the future expected cash flow declined to 20 million. That is a statement telling you about some kind of impairment loss, right? Due to unanticipated economic downturn, which is one of the impairment indicator. So that present value of the future expected cash flow is actually your recoverable amount. Let us look at what is required in the question. You are asked to prepare the extract of statement of profit or loss, not to do the accounting statement, but to prepare only the extract of statement of profit or loss for 2 years, 2016, 2016, meaning that in the year the commercial production has started. And in 2017, 2017 is in the year there was an indicator of impairment, right? Before you can do that, you can straight away go and prepare your statement of profit or loss. But you need to know what are to be included in the statement of profit or loss. For that, let's start by doing a plan. We will first draw a timeline diagram showing what happened in the year the development costs are being capitalized. So I will start drawing the years in which it is being capitalized, which is in 2014 and 2015. We'll draw this line and we'll divide that into 4 years, where this is the first year, yeah, 1st of January 2014 until 31st of December 2014. And in the second year, yeah, these 2 years is what you call development phase, 2014 and 2015 development phase. And this is the third year, and this is the fourth year of the years in which development costs is being capitalized. And the current year is 2017. This is our current year. And development expenditure incurred in the first year, 2014, was 17 million. In the second year was 20 million. So the total for the 2 years will be 37 million. As at 2016, the commercial production started. And on the date the commercial production started, you are informed that the company has an expected useful life of 5 years, right? All this information on fair value, please ignore. There's no information on fair value. Okay, just ignore this. Just ignore this information. There is no information about this. Okay. Next. The 3 years before the current year is what you call prior year, if you can still recall knowledge in FAR320. So this is the year that the commercial production started. This is the year. Yeah, the year that the commercial production started. This is the year. And also this is the year that you will start doing your amortization. Right? So there will be an amortization that will be done in 2016 and also in 2017. For 2016, it will be 7.4 million, where you get 37, which is 20 plus 17, divided by the useful life of 5 years. And because it is exactly 1 year from 1st of January until 31st of December, so therefore 7.4 million will be debited as amortization expense and will be credited as accumulated amortization. So this will be included in the SOPL in 2016. SOPL in 2016 will show amortization. And in 2017, right, it has been also the second year that you amortize. Another 7.4. There are no changes in the fair value whatsoever. And the company does not even has any revaluation model being adopted. So in our case, this company is using cost model. Okay. So amortization 7.4 will be shown in the SOPL in 2017. Right. Next. As at 31st of December 2016, the carrying amount is 29.6, which is taking the cost of the development expenditure here, development expenditures 37, 20 plus 17, minus 7.4, the accumulated amortization. So that was the first year of amortization, so it's the same as 7.4 there. You have 29.6 million, which is the carrying amount. In the second year, before the impairment test, the carrying amount is 22 million. 37 million minus 14.8. 14.8 is 7.4 million plus 7.4 million. So the accumulated amortization is 14.8. And the carrying amount before the impairment loss, right? Before the impairment loss on 31st of December 2017, before impairment testing actually, was 22.2 million. And at the end of 2017, you have the impairment indicator telling that there was an economic downturn. And in the question, it gives you the present value of the future expected cash flow to be 20 million. And that is actually the information on recoverable amount. Recoverable amount is actually the higher between the value in use and the fair value less cost to sell. But here you just have the so-called recoverable amount information in the form of present value. Therefore, it is 70 million. Sorry, it is 20 million. So because it was 20 million recoverable amount, you will compare them with 22 million, the carrying amount. So therefore, there is a drop in the carrying amount from 22.2 million to 20 million, and therefore gives you 2.2 million of impairment loss. This impairment loss will be shown in the SOPL for 2017 because it is an expense. So in terms of debit, credit, this one will be debited to the SOPL impairment loss and will be credited to the accumulated impairment. It's best that you draw a timeline before you decide to straight away prepare your extract of software because you can see things better with the timeline. So we'll go to the extract software. So these are the information that we have worked out earlier. 7.4 million for the amortization for 2016, another one for 2017. You are asked to prepare for 2 years. Impairment loss only in 2017, 31st of December, you incur the loss, 2.2 million. That are the expenses that are incurred by the company. Yeah, it was just three figures here, but it goes long way to get that. And then you are also asked to prepare the statement of financial position. But before that, let me check whether you are asked to prepare statement of financial position. Let's just check here. Um, Never mind, it will take time. Okay. We first see statement of profit or loss. And this is the working for the impairment again. We are working for impairment. Impairment loss. That was in 2017. The different carrying amount, in differences in the carrying amount, yeah, of the uh, development cost as at 31st of December compared with recoverable amount. Okay, when you are not asked to prepare the software. Okay, that's it. Thank you for watching. I hope you have learned a lot from this session. I'll see you when I will see you. Assalamualaikum warahmatullahi wabarakatuh.